Hi everybody, before I start the show, I just want to remind you that I'm giving away 5 copies of Cashflow Cookbook, a new book written by last week's guest, Gord Stein. If you're interested in winning a copy, head over to bohumphreys.com/giveaway and enter. The giveaway runs until July 31st, 2018. Good luck.
This is the Personal Finance Show.
Hi, I'm Bo Humphreys, and this is the Personal Finance Show. This episode is about the future of payments in Canada and around the world. How do you pay for things today in your personal and business lives? Cash, check, credit, debit, wire transfers, email money transfers? Maybe you're living in the future and pay for everything with your phone. Have you ever wondered if cash and checks or paper transactions will always be around? Did you know that 875 million checks were written in Canada last year? That might surprise you if you don't even have a checkbook, but many businesses still rely on checks to make all their payments. It provides a paper trail or audit trail if you always have the Canada Revenue Agency on your mind. Will it always be this way? What does the future of payments hold? To understand the future, it might help to understand more about how payments are processed today. In May 2018, I was at the Payments Canada Summit, and I interviewed 4 people about the future of payments. So what I didn't realize when I decided to do the interviews outside was that there would be so many large trucks passing by and braking during the interviews. So just a heads up about that, and my apologies if sometimes it's hard to hear what we're saying. My first guest is Sue Whitney, Head of Industry Relations for Payment Canada. Since most everyone I know has no idea what Payments Canada is or what they do, I asked Sue to break it down for us.
So Payments Canada, think of it as like it's the infrastructure that helps money move between banks at the end of the day. So you might go and make a purchase at a store, but the way the money actually gets to the merchant is because his bank talks to another bank to receive money at the end of the day.
And you guys put all the stuff together to help them communicate?
We connect all of those bank systems together so that the money moves between the two banks. And then at the end of the day, that the banks actually settle with their bank, which is our Bank of Canada.
Okay, and why can't they just connect themselves?
Well, you kind of need a system that connects and plugs in banks together to each other, and you
Sure.
need some standards and some rules to make sure that the money actually moves the way you want it to.
And we can't trust the banks to make their own rules, right?
I don't know about that. What I do know is actually banks love us because we establish the clear rules of the road. So
Okay, good.
everybody knows how it works, and so we don't have funny hiccups or payments that don't arrive or big debates at the end of the day about who owes what to the other guy, because we've set the rules and the processes so it all runs pretty smoothly.
And are you a government entity?
So we're created by legislation in Parliament.
Okay.
We are not a regulator per se. We make the rules and the standards for how people use our systems.
Okay.
But we do it in a way that the Bank of Canada and the Department of Finance want it to happen so that we're an engine of efficiency for the economy.
And the Bank of Canada, is that a bank as we think of banks being? Like, you know, I'm looking at the BMO Tower right now.
Yeah, so no, the Bank of Canada is the central bank, so it's really a bank for banks.
Okay.
It's also the organization that sets our interest rates, for
And
example.
they print the money?
They print the
Yeah.
money, they manage our money supply
Perfect.
and establish the value of the dollar. And so they have a big role in our economy generally, and one of the roles they normally play is they help the money movement between the banks. In this case, the Bank of Canada created us with the Department of Finance, they created us to actually be an execution arm of that function.
So it's really good to have you guys around. You're basically protecting our money.
We are absolutely protecting your money and transactions and the way that money moves across the country. So it's kind of like the grease in an engine in a lot of ways, because if you made a payment to somebody and it doesn't actually get there, then you might not be able to buy your house or have your credit card bill paid on time or pay somebody in a store by tapping your credit card, for example. All those payments, all that money has to actually move between banks.
And we just take for granted that happens.
Right, and that's a good thing.
Automatically, yeah.
If
now
people
we do.
don't know who we are, that means everything's working beautifully.
That's a good point. And so we're at the summit, the annual Payments Canada Summit. So what is this summit all about, and why? Well, who attends this summit, and why are people coming to it?
Right. So the summit is the annual conference that we run. The reason we run it is because our whole economy depends on payments working. And so what we do is bring together once a year all the users of our systems. So that could include financial institutions, but it's also small businesses and big corporations and governments and people who need to know that their money's going to move and want to understand how we're thinking about innovation and how it can help them.
Yeah, I was at a small business, small to medium enterprise, I guess, session yesterday, and they were talking about the reason why we still have checks.
Yes.
And part of it was because of the CRA, because people think that the CRA still needs that, and then the CRA guy stood up at the back of the room and got in on the conversation.
That's great.
So you don't ever expect the CRA to be there, but they come too.
Right. Yeah, and that's the whole intention, right? Is if we're going to get this right as a country, we need everybody to talk to each other. How do you want to pay? How do you want to get paid? Where is there friction in the way you have payments today? And how can we make that better? And to be able to bring everyone into one building once a year and check on how we're doing means we're just going to keep getting better.
Yeah, and 2018, everyone keeps telling me this is a pivotal year because all the technologies and everything is coming together and everyone's been kind of trying out a bunch of things and maybe now they're ready to go forward.
Yeah. It's an incredibly exciting time in payments. I know not everybody thinks about payments every day. I do. But there's two things happening in payments right now. The first one is that consumers are expecting things immediately.
Sure.
Like I want to be able to walk into a coffee shop. I have pre-ordered for my coffee and I can pick it up and walk out the door.
Right.
I can hop in an Uber. I don't have to pay anybody and I get to my destination.
Automatic.
So it's this instant automatic satisfaction without having to actually think about paying for things. That's a consumer expectation. At the same time, we have incredible change in technology and we're able to do things that we could never have done 5 or 10 years ago. Just think about the power in your cell phone. That same kind of incredible growth is happening in payments core computer systems, core technology, that's allowing us to think about the possibilities of doing things differently. So there's demand for change and there's capacity for change. And so we're using those two forces to smash together to say, okay, how do we modernize the systems that we operate and actually make payments better?
So the technologies like blockchain or new payment rails, however the money travels right now, it's like it's getting a total upgrade.
That's correct. We are looking at ways to up our safety and soundness, to defend against cyber attacks if they ever happen to occur in Canada, to deliver things faster, to be able to have a bigger message so that you can tell the story about a payment when it arrives.
I like that one because right now, I mean, sometimes you can't even tell what a transaction is when you're looking at it. It just says transfer or something.
Right.
And wouldn't it be great if it actually had as much data as we wanted in there? It would tell me everything.
So I'll give you two great examples
Sure.
of that. The first one is I started to receive a few years ago this check from the Government of Canada, and it was a paper check still. And on that check, it simply said $50, Government of Canada. Okay. Nobody ever told me why I was getting $50.
Really?
I had no idea. It turns out, because I did some digging, because I kept getting it. I was afraid they were going to come back and take it away.
Yeah.
And so I phoned them and I said, okay, what is this thing? It turned out it was a child benefit, but I was only being paid for one person.
Oh.
Instead, I have 3 kids, and they were only paying me for one, so it was totally confusing.
Wow.
So, but that's one example of how you could get a payment today.
You should be getting more.
You don't know what it is.
Yeah.
That's right. Another example is when today you could get paid. You might get, so if you're a small business, say, and you're expecting a check or a payment from somebody for $150.
Sure.
A check arrives, or an e-transfer or whatever arrives, and it's for $100.
Yeah.
And no explanation. And you're like, what's with this $150? What's it for? And if that message that comes with that payment could say, I'm only paying you $100 because what you sent me was actually damaged.
Okay, yeah, so that would all be in the payment itself.
Right,
and whatever way
exactly.
we have to interpret the payment, say our bank or like Mint or whatever we use might be able to read that.
Right.
But the technology hasn't got there yet, or it's there but it's not widely used.
Right, so what we're doing is we're building systems
Yes.
that are going to be capable of carrying the context of a payment with the payment message.
I like that.
So then
it's all
people
together.
are all in one place, so the confusion. Think about how much time and energy we spend on communicating in other aspects of our life. Well, we don't in payments. And so this is part of what we want to do.
Well, this all sounds so fantastic. So thanks so much for coming and sitting with me out here in apparently a truck stop, and explaining. I think people need to know about Payments Canada, and thanks for putting this on.
Happy to do so. It's pretty exciting, and hopefully people will start to actually notice more efficiency, greater information, and just a more satisfying payment experience.
I think they will. Thanks.
So Payments Canada is there to keep it all together and make sure everyone is basically following the same rules. Next up is Sam Mulligan from a Montreal company called Mobeewave. So Mobeewave's vision is to enable you to accept money for anything, anywhere, and from anyone using your phone. Here's Sam to tell you a bit more about Mobeewave.
So we're Mobeewave. We're a fintech startup based in Montreal. And we've developed a payment acceptance solution that enables you to accept payment directly on your phone. It essentially turns a smartphone into a payment terminal. It enables you to accept contactless payment from contactless cards or mobile wallets just using the phone itself. So no external hardware, no need for a separate terminal or cables. We provide the solution as a white label solution to financial institutions, network operators and non-profits, both here in Canada and overseas. And they in turn then provide it to their clients. They can be small and medium-sized enterprises, merchants, micro-merchants, or it can be used indeed as a P2P solution. So we're really enabling anybody to accept payment, making that an option for anybody, but really with a bring-your-own-device solution. They can use this on an off-the-shelf smartphone. We have an agreement with Samsung, a global agreement that was announced earlier this year, which enables us to deploy the Mobeewave solution on Samsung devices around the world, which is obviously great for us. We've projects underway in Australia. We're soon to announce something here in Canada. We work with MasterCard in Poland, where they're working with a local acquiring bank, providing a solution to merchants there. So really we've reached a point now, I think, in the payment landscape where there is a payment solution for everyone. Merchants of all sizes who maybe previously didn't, for whatever reason, adopt a traditional payment solution, be it a cost factor or for practical reasons, now have the option really to accept payment, cashless, contactless payment directly on their phone. So we work with financial institutions, like I said, to provide that. We also collaborate with other players in the payment field and in the technology field as well.
So for me as a consumer, am I going to be able to see any of this change, or is it just going to be like, I'm going to get this app on my phone and your technology is going to be in there somewhere?
Yeah, well, that's essentially boiled down to it. That's what it's going to be. So we will provide our technology to a bank, and a bank will then, with its own branding, provide it to you as their customer. So you would, whatever bank you're with, you will sign up for the service, and it's literally a case of downloading an application onto your phone, and then you can start accepting payments that day. So it's really that kind of solution.
So the future of payments is more instant payments, and because everything's already connected and there's already a system to verify everything?
Yeah, the very fact that it goes straight into your bank account makes it a quicker transaction from that point of view. It's obviously more flexibility because you're receiving payment at the point of sale or the point of delivery as opposed to being paid at a later date. So from your point of view as a business person trying to get paid for the service you provide, it's speeding up the whole process. And it's providing you greater flexibility as well. You don't have to carry around another device. You don't have to make a trip to the bank to deposit your check or cash for that matter. It's giving you a more flexible solution to kind of suit maybe the nature of your business. Maybe you're more mobile, you're going to be moving around, you're not necessarily in a bricks and mortar location, so that's another advantage to it.
My next guest on this episode was my first guest ever on episode 1 of the Personal Finance Show. Chris Chan is managing principal at a company called Dwello. Dwello Payments is about automating payments between landlords and tenants. Remember the 875 million checks from last year? Too many of those were between tenants and landlords. Chris has a mission to change that and bring the payments online. Dwello Score is the upcoming innovative scoring platform for landlords, property managers. It's more accurate than a simple credit report. Did you know that credit reports don't even include renting history? I paid someone rent every month for the last 15 years, and there's no record of this. It seems ridiculous, and it should be something that a landlord can look up as easily as your credit card history. Chris is working on that. It was great to meet up with Chris a year later to get an update on Dwello Score and payments, and to hear his concerns about the best way to step into the future of payments without giving up too much of our personal information along the way.
So I think the biggest thing about Score is that we're an immigrant country. Like, we have a lot of people that are coming over. There's a lot of students that are just starting their life, and they don't have credit scores. It's always a landlord's problem when they're going to rent out to somebody who doesn't necessarily have a great credit score or no non-existent record on the credit score, but they've since recuperated, or now they have money, or they're getting paid by their parents to come over here to fund their education and fund their living. And when you have like those assets that are coming in, there's nothing that just a plain old credit bureau will be able to get to you. So the idea of the score is to provide an additional set of variables that you can essentially perform metrics on and score somebody on, so that you can give more information, more accurate information to the landlord, depending on the cost of your unit, to determine if a person's the best fit for you. So I think it does both sides. It prevents people that are professional tenants, people that want to skip out on you, and and squatters that want to cause you trouble, people that move a whole bunch of times or don't seem to pay rent ever. You'll be able to see that kind of thing. But it also opens up the market to people that might not have a credit score in the system, but they have a good job and they're doing okay, and they have a huge chunk of change that they're sitting on that they can afford 6, 7, 1 year's worth of rent without any problems. So it opens the door for that. And the idea is that we want it to be practically instant, like 3 to 5 minutes. While you're sitting there doing the application, do your employment check, do your income check, and as well make sure that it wasn't, you're not spending too much money. And then you can hopefully at that point be able to secure your unit without ever having to leave the property manager's office.
That's awesome. So Dwello Score is a different kind of score, and then the payment side of paying your rent differently, that's still going on.
That's still going on. So we're looking to implement a few new methods of payment in addition to just straight bank transfer. We're obviously still keeping our eye out on crypto. We'll see if anybody ends up taking the lead and becoming something useful that they can use crypto for. And then the payments have been automated and everybody loves it so far.
So right now you're still running on the Canadian old school way of transferring money, right? Typically how does someone pay their rent? Is it with an EFT or?
Well, yeah, it's a lot of people use it's EFTs based.
Yeah, and it's not instant.
It's not instant. It will be, but when EFTs start launching end of this year, which is very exciting for us because that's 2-hour settlement, and when EFTs become instantaneous or real time, I think end of next year, that's their timeline. Then that's far more exciting for us, and then it's far more exciting for the property managers as well.
And that's where payments is heading. So it's going to just get quicker and quicker. And then what about other things that we're hearing about the future of payments, like including different information in a payment? Is this kind of stuff going to be important for you? Being able to actually get all the information by looking at a payment.
I think that there's good and bad parts about it. It's one of those things that if you're putting a lot of effort and time into attaching data points to a payment, I think that at least in Canada there's a lot of privacy concerns about how people are going to end up using that data, how that data could be stolen, how that data is secured and stored. It's one of those things that somebody can build a massive profile on you. Now, granted, organizations such as us, we're already doing that data attachment, which is actually important because right now, as you're processing checks and doing EFTs, if you're doing that on your own, it doesn't necessarily tie down to something that's physical or like one particular unit, one particular tenant, one particular anything else. But I think that that's something that it shouldn't necessarily be attached to the payment on the bank side of things. I think third-party people who are specific to what you are transacting for, that those types of data points are the ones that are going to stick around to get kept. What you bought, maybe where you bought stuff from, and how much, obviously, and when. Those are going to always be data points that are attached. But I don't think what exactly did you buy, what color I don't think that stuff like that, the data points are that important.
But for you, like, wouldn't having a lot of information about who rents what and what demographics and, like you said, what the percentage are immigrants or new Canadians, wouldn't that help your business develop?
Of course, this type of data would, but I mean, that information has to be voluntary. It has to be volunteered.
Okay.
I don't think that this information should be, in order for you to make this payment, you got to tell us where you're from, who your parents are, what color car you drive, and all the other things, because we're already living in a world where privacy is a concern. It's an issue. We had that major Equifax breach where God knows how much information is stored at these bureaus who have been entrusted to store our financial and personal information. We're entrusting these people to store our information, and when you have one rogue player, one contractor who happens to have high-level database access to be able to gut the database or have a leak somehow because of outdated security software, you're at risk for a lot of this data.
So we're never going to be hitting a point then where, like, because everyone's information is stored somewhere, right? Like, either Equifax, so like you said, and then the credit bureaus or at a bank or whatever. So it's never going to be like somebody can look up all your information because they got a payment from you. That would be a little bit too far.
Well, obviously, and also having
all that detail.
Yeah, and having one agency have all this power. Like, for example, if Payments Canada were the facilitator of moving that much data from one place to another, especially if it's all this demographic information and data, then I think that that's too much. If it's volunteered information, saying, like, for example, you look at a lot of points programs, right? A lot of points programs, they're putting in demographics, they're putting in, like, what you bought and all these things. But you're volunteering this information.
Yeah, they would ask you those questions.
Right.
Yeah.
They're going to say, you're going to tell us exactly what you bought, where you bought it. You shop at Metro, you go buy gas at Shell. If you're volunteering all this information as a method of, okay, now a rewards program like Air Miles or Aeroplan can take this information and then monetize the corporations to advertise more relevant ads to you, I think that, of course, that makes sense.
Do people know that? Do you think people know that when they're using a rewards card, they're actually collecting all that data? Is that a common thing? I hope it is.
I hope it is, but I know that a lot of people don't read the fine print. A lot of people don't necessarily pay attention. A lot of people don't care. Like, there's a lot of people are around saying, I have nothing to hide. I'm like, okay, well, I mean, you should always have the option to hide it.
Yeah.
But we always have the option to not subscribe to a rewards card, right? If you're making a payment, if you're just making a regular car payment and you don't want to opt into providing all this data, you should be able to opt out of it.
So like, when my bank is categorizing my purchases right now, especially to get rewards if it's a credit card, like, should I assume that that's all being collected too for use in some, well, not nefarious way, but in some way to help promote to me?
I think when the banks do it for your checking and savings account, I think that actually is...
That's internal?
That's internal.
Okay.
Because getting that information shared from one institution to another or to third-party advertisers, I think that's a breach if they're doing it.
Okay.
But I strongly don't think that they're doing it. But when they're affiliated card networks like Visa, MasterCard, and other companies that are using it and categorizing it, they're helping, like... They are masking it as a tool for you to help you spend better and spend wiser and know where your money is going. but also deliver you more relevant ads, because that's, I think, as a part of rewards programs and a lot of these credit cards, it makes sense. It makes sense.
So, yeah, what do you think about the future of cryptocurrencies, or like just in general?
I think that the idea of cryptocurrency, it needs to, at some point, it doesn't necessarily have to be tied down to a country. At some point in the future, I strongly believe that there will be a world currency of some form, and it will be living like, it'll be crypto in a sense that it lives on the blockchain. I think the applications of blockchain are far more reaching than just currency. The way that it's being traded around and the word that's being thrown around, it's abuse of power, essentially.
Okay.
To get all these investors jumping on this quote-unquote trend when we know it's the future, but it's being applied very wrong right now. It's like buying something for the hope that tomorrow somebody else will buy it for more. That's a definition of an asset, but assets, at least in stocks, are based upon physical, like profits, or how a company's doing, not just the idea of something.
Some kind of operations.
Or at least based in like gold or something.
Yeah, or something tangible.
Something tangible that somebody at some point ends up buying.
So this is investing in an idea.
Yeah.
Despite the fact that the blockchain is there, it's not necessarily gonna. The importance of the blockchain, you're saying, is not necessarily for like cryptocurrencies.
Well, the blockchain is much more far-reaching than just currency.
It's information.
It's information. It's irrefutable contracts between one party and another. It's traceability. It's a lot of great things.
It's the distributed ledger, the distributed information.
Yeah,
security.
So it's security because it's now that information is heavily secured. And it's everywhere, so you don't have to break into something to get it, but you have to, it's practically impossible to decrypt the stuff unless you have the key. Mm-hmm. So that in itself is that kind of security that I think that's our future, right? Because we no longer have the Equifaxes of the world having security breaches with unsecured data behind some false firewall. We now have encrypted currency distributed everywhere that everybody has, and the idea of it is that it's secure, so you don't have to break through. Breaking through a firewall means you have to have the key. Period.
Yeah,
that's it.
Exactly. And this, it's almost impossible. Nothing's impossible, but it's close to.
Yeah. Well, I mean, the most pressing thing is now that Google's apparently created the first quantum computer.
Okay.
So that elevates the level of computing power by a factor of a lot. It reduces the workloads for simple mathematics, which everything we have, to a fraction of what it used to. So the most important thing is, I think, for crypto to catch up is to make sure that their keys are now quantumly secured. So it would take a quantum computer or multiple quantum computers, still tens or 20s or millions of years to break codes by brute force.
So the future of payments and the future of all this, it seems to be increased speed, increased security, hopefully, and maybe transmitting data in a more secure way, and more of it, but hopefully with the option for privacy too.
Yeah, and I think that right now we're standing in a spot where we have these major players who are still responsible for changing a number on one computer and moving it to another computer.
Yeah.
And there's a lot of fees and interchange revolved around moving bits of electrons around. The hope is, and we were just at a keynote where they're talking about, instant, invisible, and free payments from peer-to-peer. I still think that's the future. I understand why these archaic systems are still around. That's not the case now, but I mean, it's the future. I believe that moving a bit from one place to another should be as simple as pressing a keystroke on your internet browser on some website somewhere. That's it. That's our future.
It's going to be that easy.
Yeah, and the information and the analytics that are going to be around it, that you voluntarily supply, and the analytics around all that, that's where the money's going to be.
Last but definitely not least, I have Laurence Cooke. CEO and founder of Nanopay. In 2016, Nanopay bought a digital cash platform called MintChip from the Royal Canadian Mint. Laurence will explain the benefits of digital cash, but first he's got a great story about how messed up our current system is and why.
Yes, I've been in tech. I was in telecom before. And when I was in telecom, I saw lots of terrible payment experiences.
Okay.
And the real thing there is you end up with someone on the end of the phone that has had a service turned off, whether it's the internet or their mobile phone, and they're desperate to have it turned back on.
Yeah.
But you can't turn it back on until they've paid you.
The verified payment.
The verified
through.
payment.
Oh, man.
And that can take days. And that's the most
Yeah.
frustrating thing for them and for us. I mean, you want to take their payment and put their service on so they can carry on using it, but it would take days. But let me start off with a story that actually happened after we started the business, which really just epitomizes the problems with payments today.
Okay, so you had already acquired MintChip.
At the same time that we acquired MintChip, we also did our Series A.
Okay.
And our Series A was led by Goldman Sachs in the merchant banking division, and they knew that we needed to get the funds that day to pay for MintChip. So we're trying to do the financing and the funding on the same day. So they sent the wire twice, and they sent the wire twice through two different routes, but they didn't tell me that they'd send it twice. So we get the first group of funds, and we close the transaction, and we buy MintChip, and we're all good. And then half an hour later, a bank calls me and says, actually, we received a second payment.
Oh my God.
So I said, okay, I don't know what that's about, but I assume it's a mistake. Can you send it back? Right? And it's for the same amount. So clearly it's a mistake. I send it back immediately. And so the transaction is concluded. So it's a new transaction to send it back in the same direction. But they got the payment credential on both sides, so it shouldn't be that difficult, right?
Okay.
So the next day, the Goldman guys call me and they're like, phew, that was like hard work, great job closing everything. You know, we did send the payment a second time because we were worried that we didn't get the money. And but we haven't received the money back. So I joked with them and I said, oh, I thought the second one was for my personal account.
Yeah, exactly.
You know? And like they had this uncomfortable chuckle, and then I'm like, look, I'm kidding. I sent the money back yesterday, don't worry. So they said, okay, well, we haven't received it. So I said, oh, no problem, I'm sure it'll turn up. So a week later, they still haven't got the money.
Oh,
so then
man.
they call up and they say, you sure you did send it? So I'm like, so then I go and dig out the paperwork and I send it to them, and I can see these guys thinking, maybe he wasn't joking about his personal account. Maybe we've invested in this guy that's just stolen all this money.
And what if it was people that you didn't know, or were sort of loosely associated
and this
with?
guy hasn't sent the money back to us. He's stashed it somewhere or something awful. So now I'm going over and above, like to try and prove that I actually sent the money. So we start trying to investigate from our end. They're trying to investigate from their end. And we literally could not find out where the money was.
Really?
The money was missing. It had gone our end and was not received their end.
And we're talking like millions here?
Yeah, we're talking multiple millions,
Yeah.
and it's just sending from Toronto to New York. And eventually, at 10 days, the money turned up, and they went, phew. And only then could they see that I actually did send it on the day that I said I sent it.
So why did it take so long? Did you find
out?
out?
It got lost in the correspondent banking network because it had changed currency, and it was a simple wire payment, and it should have turned up, but it just didn't. What happens is sometimes wire payments, when they're going from one platform to another, they just get lost somewhere in the ecosystem, and some bank was sitting on it. And we still to this day don't even know where it was.
So were the banks just built in this sort of haphazard way?
Well, no. So the whole
technology?
Well, the whole background to correspondent banking is it worked perfectly in a paper way, right?
Okay.
So in a paper world, some other bank in a foreign country holds your bank's money, so that if you need to make so let's just say you're a bank in Canada, and you're a customer of a bank in Canada, and you want to make a payment in the UK.
Sure.
Then if you're, say, RBC has money sitting in a Barclays account in the UK. So when you want to do a payment to the UK, you give the payment details, let's say it's at NatWest Bank, to your bank in Canada, to RBC. RBC, effectively, in the old days, used to pick up the phone or send a bit of paper or send a telegram to say, please pay this other bank this amount.
Okay,
and they take money out of your account, that is the bank's account in the UK, and send it to the other bank.
So it's already set up that way, and people would expect it to take some time.
And it would expect to take that some time. Now, the SWIFT, which is the payment message, is just the messaging component. It's only settled days later. So, 1 to 3 days later, the actual payment settled. And sometimes the sending bank waits for the payment to settle before they do the next leg, because they don't want to get into a situation where they're providing the other banks too much credit, because that's risky for them. And who knows what if the bank goes bust. So the larger the payments, the bigger this issue is. Okay. And sometimes the payments are so big, they just have to wait until all the banks settle to make sure that there's enough money to actually pay out. So it's this crazy, archaic system. And they've literally got trillions of dollars sitting in trapped capital all around the world, waiting to make foreign payments.
Oh, so they could be investing that money or doing something, lowering our fees.
Exactly. So there are three elements to this from a bank's perspective.
Sure.
So if you're a consumer, you go to the bank, you want to send money to the States, you're horrified by how bad the rate is that you get.
Mm-hmm.
But I'll tell you why. The first thing is your bank in Canada has already got the money sitting in the US.
Okay.
But they paid a certain price for that, right? So they've already pre-purchased that. If the US dollar goes down to the Canadian dollar, then the balance sheet of the Canadian bank goes down. So that's bad for them, right?
Yeah.
So they take currency risk. The second thing is there are 14,000 banks in the US.
That's a lot of banks.
You can't have money sitting in 14,000 banks. So, and if you did, you'd take credit risk, and credit risk is expensive as well. If you don't, it's got to go multiple hops, which means you send it from one bank, and one bank sends it to another bank, and maybe even a third hop before it gets there. And they all have different systems, so it might be manually rekeyed. A lot of those have manual intervention. Then there could be something wrong with the data set that they provided, in which case a fraud flag goes up, and everyone panics, and you start phoning around and getting more data, and it can take a while. But also that means more mouths to feed, and it's just got to take longer. So it's more expensive and it takes longer. Then the third thing is that when you actually give your customer a rate, you kind of know where the currency is at the time that you give the rate, but you have to give a big spread because you actually only settle the transaction overnight, which could be up to 24 hours later.
Yeah.
And the currency could move between them. So you've got to give yourself enough room to make sure that you're not out of the money by the time you settle. So by definition, the bank has to give you a bad rate. There's no other alternative. They have to give you a wide spread, which means they have to give you a bad rate.
And all I want to do is pay my friend back for the concert tickets.
Exactly.
The $100, say
Exactly.
US, and
Yeah.
I'm in Canada.
Yeah.
And all of this is going on
Yeah.
behind the scenes. And so what is your technology doing to fix this kind of thing?
Yeah, so
Or how is it different?
Yeah, so we have a digital fiat currency, and let me go into that a little bit. Firstly, fiat is money that is backed by a central bank. So Canadian dollars in Canada, US dollars in the US, sterling in the UK,
Okay.
euro in Europe, right? So it's backed by a central bank. Those are all fiat currencies. And what we want to do is create a digital fiat. And a digital fiat is the same as the paper money in that it is an electronic risk-free claim against the central bank.
You just don't have to print the money.
You just don't have to put the money.
And
Instead, we digitize it.
And it's on your phone
And
or,
it's-
or
exactly.
somewhere
Or it
else.
sits in the cloud.
Yeah, it sits in the cloud, but
Yeah.
you access it with probably your phone or your computer.
Correct.
Whatever you have.
And you can
Okay.
do that in real time.
Yes.
And if you want to make a payment long distance, it's kind of difficult to do that with paper money. You have to
really
put it in the
is.
mail, right?
Yeah.
Or jump on
I
a
wouldn't
plane.
recommend that.
Yeah, or jump on a plane and physically deliver it.
That's right.
Which might actually still be the quickest way to move money without our platform.
Yeah.
So as an alternative, we digitize the money and we say digital Canadian dollars in Canada and digital US dollars in the US. And then the banks settle in real time on our platform, so there's no settlement risk anymore, so they can afford to give you a better rate. At the same time, they can guarantee their margin because they can say this is what the currency is at right now and this
Okay.
is the margin. So they can guarantee their margin and put it in their back pocket rather than taking risk every time they do a transaction.
They don't have to keep holding the foreign currency like
Yeah,
they
and they
used
don't have to hold the foreign currency. They hold it in their home currency. They only,
Yes.
So the Canadian bank holds it in Canadian dollars.
And it's because of the speed of the transaction.
Yes,
that
and
they
then
can do this.
we actually do the transaction in real time. So they're not taking any credit risk with the other bank, and they're not taking any currency risk, and they're also not taking any settlement risk. Globally, it costs banks $180 billion a year to send money over correspondent banking. $180 billion.
Why does it it shouldn't cost money to send money? I know.
Yeah,
I know
but
it
that's what it
has
costs
to. I know
banks.
it costs money.
Yeah.
But it should be. Yeah, I don't know. I just my instinct is that it shouldn't be this way. This isn't the same as what cryptocurrencies are trying to do.
No, it's not, because we're not trying to make up a currency, and we're not
Yeah.
going in and out of a made-up currency.
You're just changing the format of our existing currency. You're not trying to make it so that it's not connected to a government or not backed by anything.
Correct.
So why wouldn't the cryptocurrencies win in this situation? Like why would people? I understand why people would choose the government backed because that's what they want. But what are the flaws in the fiat currency that are making us want to go digital, which is the same, I guess, as the cryptocurrency's reason for being?
Yeah, so I think there are a few things. Firstly, a lot of cryptocurrencies use blockchain technology.
Okay.
And despite what the best pundits might say, it can never and will never scale. And that's for a few reasons. The first thing is, if you look at Bitcoin alone,
Yeah.
It uses enough energy to, provide energy for a couple of big cities already.
I've been thinking about this while I wrote an article on cryptocurrency, and it took 2 hours for me, maybe more, for me to get a transaction through.
Yeah.
And like when I think about something that's digital, like what you're doing, I think fast and it should be cheap. But you said the energy, so people are mining with these, webs of computers.
Exactly.
And it's using so much energy that it's going to destroy us.
Yeah, so the energy cost alone makes it impossible to actually do a low-cost payment. In fact, in January this year, Bitcoin took fast and cheap payments off their website. So even Bitcoin doesn't claim to be fast and cheap anymore.
So wait, what's the benefit
and that's
of
because
Bitcoin
they are neither.
Now? Why? What are they selling now? Like, what's the benefit of the decentralization?
Yeah, so if you want to make a payment that you don't want anyone to find out about, I think Bitcoin's attractive. If you want to, pay someone in a nefarious situation, it makes sense. But if you look at the laws just about everywhere in the world, it's actually illegal to pay someone you don't know and don't trust.
So basically, all that's left is the illegal stuff. All the stuff that was the benefit, you don't have to pay fees and it's quicker, which is what I thought they were started with.
And the underlying problem there is that a lot of the cryptocurrencies have actually used their underlying crypto to grease the wheels of the platform. So in Bitcoin's case, you mine it to earn Bitcoin.
And you get a little tiny bit of Bitcoin.
And you get a tiny
bit
of Bitcoin.
Yeah.
But the energy cost of the tiny bit of Bitcoin make Bitcoin so expensive as a transaction platform. At the same time, as the utility increases, say more people accept Bitcoin, the value of Bitcoin goes up. And when the value of Bitcoin goes up, the costs of a Bitcoin transaction also go up. Which means if you're going to pay $50 to get a cup of coffee, it doesn't make sense to use Bitcoin.
No.
It's going to take an hour, right?
Yeah, they're not going to be
It's going to be expensive.
The transaction.
Yeah. So what, are you going to wait for an hour before you can drink your coffee?
That's just so ridiculous to me. So because everyone would think digital currency, they think cryptocurrency. That's what they think. But they're just very, very different in terms of they want to be almost nefarious is where everything's heading. And the energy thing just gets me so much.
Yeah.
So you guys, you're not doing this. Even so, you don't need to mine. Nobody needs to.
Correct.
Because it's not a. Is it a distributed network, though?
So the interesting thing is our platform is distributed and we do have an immutable ledger, and our immutable ledger proves with certainty that all of the transactions have indeed happened.
And then people would avoid the double wire situation that you had.
Exactly.
Because it happened,
It's
there
clear,
it is,
there.
You can read it. You can look at it, somebody can look at it anyway, the two parties. Okay, so you have the core things.
But what we don't have is the consensus, and we don't have the mining. And those are the expensive things in the ecosystem that make it unscalable.
Why do cryptocurrencies need consensus versus, say, why doesn't yours?
Well, if you want it to be open, then the only way to prove that things are correct is to do consensus. And if you want it closed or permissioned, then you don't need the consensus.
I see.
But you still need some other mechanism. But then it's by invitation only.
So what's your mechanism?
So our mechanism is we do these complex atomic transactions where you can't initiate a payment unless you actually have the value. That's the first thing.
Sure.
There's no possibility of doing double spend, and we use crypto to ensure that.
Okay. Cryptography.
Cryptography, sorry. And the third thing is we move value from one entity to the other in real time in a complex atomic transaction. And because it's atomic, there's no possibility of anyone intercepting that value.
What does atomic mean in this context?
Atomic means that the transaction happens but without even going out of memory. So if you look at a credit card payment today, it goes through multiple different loops, and it takes a long time. So it's being written to disks all over the place, and you can intercept the data or try and make another credit card transaction with that. In our environment, you can't do that because you have to have access, which requires a private key, to get to the account in the first place.
What's happening when I see pending on a so they know that I spent my money on my credit card right away because they can't let me go over my limit, but it says pending. So what is all this complex stuff happening behind the scenes?
And that's because it hasn't been written to the ledger. And when you do a credit card transaction, that creates a credit risk relationship between the merchant and the merchant's bank, between the merchant's bank and the customer's bank, and between the customer's bank and the customer.
So much going on, and so because I haven't technically paid for it yet. Actually, I won't pay for it till I pay my bill.
Correct.
Right?
Correct.
But I haven't taken the loan out from the credit card technically until it's cleared.
Correct.
And then the merchant doesn't technically have it until that's cleared, but then they don't even get it until however many days later.
Correct.
Too. There's so much time lag, and it's costing everybody money.
There's time, which is one component. There's also so much opportunity for fraud in that ecosystem. because there's so many disparate parties involved in the transaction. So in our world, this is an atomic transaction that happens in real time. No opportunity for someone to get involved or get in the middle or perpetrate a fraud. You can't do the transaction if you don't have the value. So there's no like credit risk anywhere in our ecosystem. And when you get the value, it's always in good funds.
And you said that you've done many, many transactions so far in
Yeah.
the last, 2-3 years?
Yeah, so we've been live since June 2016.
And your rate of, fraud or like
So we've had-
transactions errors is
So
very,
we've
very,
had
very low?
we've had no fraud inside our
fraud?
ecosystem at all, not one penny.
It's not possible technically?
Look,
Everything's possible.
Everything's possible, and everything can get hacked. Our platform is designed to be hacked.
Okay.
It's also designed to notice when something strange is going on.
That's good. I like that.
And then it automatically shuts down any of the related secure asset stores, which is where we hold the value.
And then because of the way that it's all set up, if somebody's doing a transaction, everything just kind of cancels itself.
Yeah, everything stops, and you can't do any transactions until we find out what's working on.
And because it's atomic, as you said, nothing can really get caught in
Correct.
the flow.
There's nothing waiting
yours
or
did.
pending or in the flow, or
Yeah.
you're taking the same amount out twice, which happens in banks all the time.
So in terms of payment methods, I was around back in the day when there was this thing called Dexit.
Yeah.
It was somebody had to have the terminal, and I had this chip that I put money on, and like it didn't work out because people, I just feel like they didn't sell it well, and maybe it wasn't efficient. Why now? Why is this all happening now that this is possible? And sorry, what applications of Nanopay, which is your company,
Yeah.
will the consumer be able to see like now or soon?
Yeah, so good question on Dexit. So Dexit, fabulous technology, and ironically, David Everett and Debbie Gamble, who are both instrumental in creating the Mintchip platform, were also instrumental in creating Dexit.
They had to learn from somewhere.
Yeah,
right?
so they've done this before.
Sure.
I think the biggest issue with Dexit is acceptance, and the terminal side of the acceptance was way ahead of its time, and it was, so as a result, it was super expensive and difficult to do.
Oh, I see.
So, if you try to do Dexit again now with all of the chip and pin terminals out there ready,
Sure.
you could use the existing infrastructure
Well, it does
and achieve
exist.
Dexit.
It's TAP now. Like,
Correct.
TAP is basically
Correct.
what Dexit was trying to be.
Correct.
It was just way sooner than it should have been.
Yeah, so, basically I think they were ahead of their market. The second thing is that the internet is now ubiquitous. And the third thing I'd say is that cryptography has come a long way. So crypto was previously very process intensive, and even in our platform, when we do an offline transaction, which is when we need to use the most crypto, the crypto overhead uses 99% of our CPU cost.
So I wanted to ask you about an offline transaction. What exactly does that mean? How can someone, can you take us through the steps of like two people, I'm paying somebody some money using, say, would you be the back-end technology of another product, or would it be like a Nanopay app?
Yeah, so it could be either. The first thing is our strategy is not to create a consumer brand.
Okay.
So consumers shouldn't see day to day when they're using us, but if they have a fantastic experience and it's really quick, it's probably us in the background.
Okay.
So we're not trying to create a consumer brand, and you could experience it today if you used our Mintchip application. It's available in Liberty Village.
Yeah, I looked it up. I didn't know who. Somebody has to accept that at a terminal.
Yeah, and in Liberty Village, there are a whole bunch of restaurants and other places that accept it, and most days I buy my lunch using that platform.
Okay, of course.
Yeah, and it's great, and we launched that just to show that our technology works, because you need to earn the stripes before you can sell your technology to banks and central banks.
So now other banks will start to implement, and so and so now I have like my bank app, and somebody else has another one and the same one. And so what are we doing with this offline?
Yeah, so offline, let's say you're not connected to the internet, which does happen occasionally.
It does, yeah.
Not much in Canada, because we've got the best wireless networks in the world in Canada.
Yeah.
But there are circumstances, maybe in the underground, when you underground, or when you're in a parking lot or something like that,
sure.
or
in a tunnel,
or you're in a tunnel on a train or something like that. But and certainly in an airplane. And in those circumstances, what we do is, instead of having the value in the cloud, we actually store the value in a secure element on your physical phone, or on a smart card.
Like my SIM card would be a secure element.
So a secure element could be, on an Android phone, there's another secure element within the device, or the SIM card.
The NFC, is that what that is?
Exactly.
Yeah.
And then we could use NFC to tap two phones together, or indeed, if we're storing the value on the SIM card, we can even use a scan of two QR codes. So they don't even have to be the same. They can be completely different phones.
So how does it know, though, what is happening outside of the online when you're offline? Is there any risk there?
So there is more risk because you could technically freeze the phone and get into the secure element. That's not an insignificant task. It's quite a lot of work to do that.
Okay.
So we risk limit it by limiting the value that you can move offline and the number of transactions you can do and the amount that you can hold.
Sure.
And then we also say after 5 transactions or 10, and we can change that arbitrarily, you have to then go and do an online transaction.
Okay.
And then we sync it back up with everything else so we can see everything that's gone on.
So I'm on
and only one of the phones needs to sync up.
Okay, so I'm on a plane.
Yeah.
And wow, that's some brakes right there.
Yeah.
So I'm on a plane, and maybe we find out they accept, my ability is to communicate in the digital fiat way, but there's no internet, so I tap with them, and they accept my money.
Yeah.
Maybe there's a limit of $100 or something.
Exactly.
And then when we get back in the internet, all those transactions re-upload or reconnect. And that's how it could work.
And the exciting thing there is that when whoever accepted that money, say the airline, it goes back on, they write the record, and then when you go back online, we check that it's the same.
And what would happen if somehow, how could it be different?
So technically it can't be different, but if someone hacked the phone and tried to create a transaction that didn't exist, and it would come on, it would say, aha, it's not the same.
So there's totally traceable stuff here.
Absolutely.
It's not like somebody...
And then we know where it originated, right?
Yeah.
We say, okay, that's not happening.
It's like when they hack it, they can't possibly hack and change like everything. So they would just know something's different, and then that would be sort of invalid.
And straight away, you would see, hold on, this has not been signed by the right party. This is an invalid transaction.
Yeah.
And you'd know who they made a transaction to.
So you're putting
then you can
yourself
follow
at risk.
up and say, oh, we'll take that money back.
Yeah, okay. So it's way more traceable and that kind of stuff. So.
Exactly.
Okay, well, this is all very enlightening for me today. I listened to the podcast that you were on, and it just... I didn't really know that this was going to be the future. Everyone's talking about cryptocurrency, and of course everyone taps with the existing network, and it seems fast, but this is going to be safer and faster and cheaper for everyone.
Much cheaper. And I think the opportunity is by doing something so much cheaper, you can transform your relationship with your customers, because then you can afford to reward them so much better than, say, a credit card or something like that, it has to reward you out of the huge spend that they're charging to the merchant.
You think maybe our bank fees will go down?
I certainly hope so.
I hope so too.
If bank costs go down, bank fees should go down.
That's the logic.
Yeah.
But banks have a mind of their own sometimes, right?
Well, I think in full transparency, you'll be able to see that.
That's right.
You're getting something better, and it should be cheaper, and we should pass on the benefit.
That sounds fantastic.
Yeah.
Okay. Well, thanks so much, Laurence.
Thank you.
Thanks for coming on the show.
If you like this episode, please subscribe to the podcast on Apple Podcasts or wherever you get your podcasts. It would mean a lot to me, and it only takes a few seconds. Thanks so much for listening to this episode of the Personal Finance Show. Next week's guest will be Mark Podolsky, also known as the Land Geek.